Welcome to Trading Lounge and the Commodities Report. So the way I see it is quite simple. As we mentioned in the last video, is that these bonds that we're looking at here, and they could be the BUNDs as well, they're over here somewhere. They're also edging lower as well. They're in the same boat as most of them will be. So there's a very clear 1, 2, 3, 4, 5 to come down here. When this low comes into place, because you're watching an Elliott wave video, you know that there's 5 waves in a particular structure, and there's a beginning, a middle, and an end. And you can clearly see here that this is not completed yet. It hasn't taken the low out. Not that it actually technically needs to take the low out, as long as there's 5 waves between wave 4 and wave 5, but it's clearly not there yet. And that means that we need this to bottom. We need the yields. Where are the 10-year yields here? We need the 10-year yields, and the 30s are running in sync as well. So these are the 5 waves in the opposite direction. So we need this wave 5 to come into play. We know this one's not completed because it's very clear that the bonds here haven't made a new low here, and this will be some 3rd wave. So there's still a 4th and a 5th wave to come down here. So there's a bit of a dog leg to come into this move here. So that means that the US 10-year yields need to top out here as well. Now, those will top out together, and then we'll need, where's the dollar? The dollar, this is the US dollar here. So in a nutshell, when the bonds bottom out and the yields top out, then the dollar will top out. And when the dollar tops out and starts to turn down, then we'll see gold and silver move to the upside. Now, we are seeing gold and silver. This is gold here, just a CFD, is it on this trading view thing? So the 50-60% is still back here. We've seen this rally here, so it sparked a bit of an interest in folks, but and silver's even moved up even more so. So we're going to take a closer look at silver today rather than gold. But I don't think that it's time to buy gold just yet. I just think that we need to see the yields top out, the bonds bottom out. We also need to see the dollar here top out as well here. Now, it doesn't have to go up to the 50-60% retracement level up here. You know, and there are, as I mentioned before, there's going to be resistance levels for these as well here. I'm not going to pull this apart today. As I mentioned over the previous videos, we were looking at a classic trading levels pattern here on the intraday through here, and once that's finished, we'll see this push up here further. So this has still got further to go up here. Yeah, there's different ways to count all of this as well. I understand that. But the main takeaway here is that the bonds haven't bottomed out, the yields haven't topped out, so this still needs to go higher. And even looking at this now, there's no way that that this is pointing down, this is pointing up. So that's really the gist of the situation, you know. And with the commodities are under pressure. Iron ore, uranium are probably ones that are bucking the trend a little bit. So we can spend a bit of time on those because we want to sort of look for opportunities within all of this. So yeah, look, that's it really. And all the yields are much the same as well. So it doesn't matter if I'm looking at the 30-year yields here as well. Let's just go to the daily chart here to get that here for this. So yeah, much the same as the 10 years, isn't it? They're talking about that inverted yield curve. So anyway, they're pretty much the same here, and there's the same for the Australians as well here on the 10 years here. It's probably lagging a little bit, but yeah, they're all, whatever markets you look at, they're all got the same, and they still need to go further to the upside. So yeah, that's anyway, that's how I see the situation. So, I mean, other folks will see it differently. And it's not always that you've got all these markets pivoting off each other, but while they are pivoting off each other, and they've got a bit of a back history of doing that for, you know, for these, so I'm using it while they're there. It's not always the same, but so anyway, that makes all of that sort of useful at that point. So anyway, that's the yields, the bonds, the dollar. So yeah, so now we can go to US spot gold. So this move up here, we don't have an impulse wave up here yet. It has moved up rather quickly. See, from this top here to this bottom here, this is this move coming down here. So this has moved up quite fast, isn't it? You know, and the price has moved up a long way, but it's quite a short way compared to the trend in either of these. So there's basically divergence going on here. So I don't think this is going to last very long here in this case. Now, the other point being here is that there's different ways to count all of this as well. As a wave 4 here, then the 38.2% retracement level is pretty much on point here, really. It's about where those little open and closes are through there, but that's something that you can have a bit of a look at. Now, this could be counted differently as well here. What intraday chart do we have this on? I think we're here somewhere. Let me just get some. So this trend here, this one here. So we're looking for wave 4 to this line here, which is the 38.2% retracement level. So we can count this as an A and a B in here, and 1 and 2. It looks like all of the third wave here. So there's a little bit more to go here. But I'm kind of, even if I got 5 waves up here and we got an ABC correction here, then we could trade long if I got 5 waves here. But this here is not really giving me that. But if we got 5 waves here, we could look at trading long up here. But even so, I don't know if we're going to get a stranger pattern in here. So what I mean by that is just coming back to that daily chart. So we've got a bit of distance in this situation. This is what I want to talk about with silver. I mean, we could get something else here. We could get something like this here. Something of this nature. I don't think that's the case. So when we look at silver for a moment here, this is silver on a monthly chart. Okay, so I want to spend a little bit more time on silver than gold today. But yeah, it's just sort of sum up gold is I just don't see it. I mean, it looks like it's a buy. But I wouldn't want to be buying it while the dollar's pushing up. It just doesn't make sort of sense. They have diverged from each other. So I do find that's interesting. That's a good point. But I'd need to see more evidence of any sort of further to the upside. So this is the silver market here. This is on a monthly chart. I won't go into a chin wag about too much of it, but obviously just very simply from the tops here, we can see that we've got this trend line through here, and it's keeping it pegged here at the moment for that. We can count this as 5 waves up here. That's not an issue, and we could look at that as wave 1 here. But I don't want to bring in people's hopes by putting this as wave 1 and back for wave 2 here, because that would take silver like way up here. Now, you know, you can listen to some gold people and they'll tell you that it's, gold and silver are going to 6, 7, 8, 9, 10, 11 billion dollars or whatever. But back here at reality, we just need to take one step by step. And of course, anything can happen in a market. So this is 5 waves up here. So all that tells me is that because I got 5 here and because this is corrective, that means I'll get another 5 here. That's all I can really say with sort of any confidence. Now, the next step here, after we sort of say we can get 5 waves coming up here, the next step here is that, yeah, we do have 3 waves here. And I was looking at this being impulsive coming up here, but it's not really showing me a really good impulsive wave structure over here for this, you know. That's also a bit of an issue as well. So based on what the US dollar is doing, is holding things down a little bit. I think that we may end up sort of bouncing around in here a little bit more before actually going to the upside here. I think it's something like this. So with that in mind, because we don't have a nice clean impulse wave up here. Here we've got 5 waves up here. The Wall Street bet guy sort of shoved that a little bit higher there in that spike. Caused a ruckus, which is always nice. So where are we? Monthly, weekly chart here. So yeah, so just going back over that here, we'll just sort of drill into it a bit. We've got 5 waves up here. We can look at that as the A wave, and I'm not that keen on spikes really, to be honest. You know, they got no traffic to them, and yes, it did create a higher price, so we can use it and all the rest of it, but I would be much happier putting this over to here for this. But anyway, that's another story, and it's open-ended. It doesn't really have an answer to it. The question is here is that we don't really have 5 waves up in this move here. That's the thing here. You know, we can look at this as an expanded flat here, which is fine. We can go an A and then have some sort of expanded flat from B here, and then 3 and 4 here. It's quite deep for the 4, and it doesn't really overlap wave 1 here because that would be an expanded flat situation here. So it's kind of okay as 1, 2, 3, 4, 5 here, but I feel like it doesn't really have the right look and feel about it. So yeah, the other thing here on the bullish side of things is that this move down through here is not impulsive to the downside. It's a corrective pattern. So sometime in the future, this top will be taken out. That's something with a little bit of confidence. Okay, so this one here could be an impulse wave, but it doesn't really show that very nicely as an impulse wave. It counts much better as a corrective wave. That's why I think that we're sort of going to be jammed in here further in some overlapping weird wave form or another. And the triangle is probably the best fit for this. So an A, B, C, D, and E here, and then pushing up at this point. I just feel like, even though that silver's pushed up here, I just don't think that, I don't think we're ready to go yet. But we're going to look at it like that as well here. So we're going to look at it both ways. I don't want to stick my head in the ground. So the other way to look at this here is, in the bullish sense, is to look at this as wave 1 here and 2 here, and then wave 1 here, and then an A wave here, a B wave here, and then a C wave here. But it never really finished off very nicely as a C wave here. It's almost, this is like this here, this, I mean, I could put this over here. No, I can't do that either because I don't get the 5 waves up here. I get 5 waves down here. So normally with a wave 2, I'd get a zigzag pattern, a nice 5, 3, 5 structure, and I don't really have that here. It's a bit difficult to, I mean, this counts better as 3 waves up here, but then yet this move down here takes better as 3 waves, so you could put this over to here. That's clearly 5 waves in my little view there. So yeah, so it's possible that we can look at it as wave 1 and 2, and then orange wave 1 and ABC in one way or another for wave 2 here. So that also means we would need to see 5 waves up here yet, up here. Now, we don't have 5 waves up here. We could get it here. This would be a little 1 and 2 and a 1 and 2 in here. So we would, basically what I'm saying, I'm not going to pull this apart on the intraday because it's just not ready yet. So if, let's just say for a moment, we got 5 waves up here. If we got 5 waves, then we're going to get an ABC correction here, okay? If we get those 5 waves and we get the ABC correction, we will look to build in a small position here, one that you can take a loss on, and then we'll look to build on top of the $25 mark, if indeed that's going to be the case. because I think that this move up here is going to end up like this move here. It's just a smaller fractal of that. And then we're going to, and the way that this came down will come down here again, and then we'll do this again, and then we'll do this, and then we'll go up here. And what this will do, this will give some time for the bonds to bottom out, the yields to top out, and the dollar to top out. So I think it's going to get all scrunchy and horrible in here. So that's my warning. Now, it's not the first time that I've been right or wrong. So we've got to, we'll just, we'll work it as we see it. Obviously, the only thing here is that if the $25 mark became the nice tested support here, well, then we'll definitely be looking to go long at that point. So anyway, a long story short is that it can push up here and we'll be ready for it. But at the same time, based on what I can see in the rest of the markets, is that this is all going to get squishy in here. So be careful what you do. Don't overtrade in there. Don't lose money. That's what you need to do in that space. If the 25 becomes support, well then Yahoo all the way at that point. But that's where we are for this market. And when I look at just go back to the gold market a little bit, I just use Newcrest Mining because it's in Australia, and I don't know where Newmont are at this stage of getting it, but a lot of the gold stocks would have rallied a little bit, but this is the fourth or the sixth biggest one in the world. And this C wave here, whichever way I look at it, I know there's going to get a bounce off the $25 mark here, that and it can skew, big numbers can skew the count a bit. So I don't panic and try to guess what it is and all the rest of it. And it could be that this is wave 1 here, and this is wave 2 here, and this is 1 and 2 and 3 and 4 and 5 for the third and fourth. But I'm still missing a fifth wave here, whichever way I want to look at this. So we're not ready. It's just not ready yet for this. You know what I mean? And this tells me that gold's not ready yet either at this point. So that's the gold and the silver, the long and the short of it all. So anyway, Monday, Tuesday, we'll pick this up here, and we'll talk about it on the intraday and understand it a little bit more. Okay, so we're over to the metals and mining. So this is the XME here, and we can look at it as a triangle, as we've been talking about for months, or we can look at WXY and come down here a little bit deeper. I don't know, they're both kind of valid to me. We'll see. We'll just see how it goes. But there's not really a lot to report here for this. We're seeing it softer here, and so where does that leave us with iron ore and the other one? Just this is gold here. Let's just have a look at go commodities. We want to go copper here. So we had two different ones here, didn't we? Just thinking for a second, just trying to find my other copper chart, which is, just bear with me a second while I just have a bit of a look around and get things sorted out here to see if I can find it. Okay, so it was interesting. This is the COMEX futures here, and it hasn't taken this move down here, hasn't taken this low out here. But when I come over to the high grade copper here, it has taken this low out here. So it really leaves it with because this low has taken out this one, it leaves this one here with a 3-wave move here. So one of the things we were talking about last week was that it's not quite ready just yet, but we can bring that down. This would talk about shorting the B wave here, so we could put it under here at this point. So we'll just let Friday play out a bit, and but we can look to short that. I don't know where the 50-60%, all those open and closes there will be and that's pin that down there, so it could just have another little leg higher, but a small position here and then another small position over here. We can see that this is coming up and getting ready as well. So we'll look at that in the next session, because I always like to have an impulse wave down and then a corrective wave back. Well, this is an impulse wave down and this is a corrective wave back, but we'll just rinse and repeat this whole pattern in a smaller fractal over here before we approach that. So it's sort of interesting that this one has taken out the low here. Probably a good idea to check the LME on this too, by the by. But as far as this is concerned, this can still be bullish with 1 and 2 and 1 and 2 here. It does look like 5 waves down here, so we'll just give it a little bit of thing, but also shorting it under here would be fine as well. And then we come over to iron ore here. So with iron ore, we've got this bullish count, but we want to confirm it. It's a little bit like this move up here is a little bit like gold or silver, rather more so like silver. So this move up through here, we'll check on it. We talked about it. What we wanted to do was to let it go up, let it finish, and let it pull back. And if it gives us 5 waves here and an ABC correction here, then we'll look to go long in this, and then we'll also look to go long in FMG and Rio and Vale and those sort of things as well. But looking at Rio and so on, they don't look like they're in a position to go yet, but they will also be Rio pretty much mirrors what's happening here, but we'll just wait for this to, it's going to top out, as I mentioned last week. It'll top out and then pull back. So we'll check on this on Monday and Tuesday and keep a bit of an eye on that. So it could be setting up good volume, increased volume with increased trend. That's a good sign. Decreasing move back down here on lower volume will be good for this. This is SGX here. So this is out of Singapore. This is that exchange rather than the Dalian Chinese exchange. So yeah, so the metals and mining for the US folks here, this is bearish here. So I just don't like shorting. I wouldn't call a short trade here in front of such a big number. It's going to get, so it'll sink through here. It's already, all this consolidation here is already done, all its bouncing and sorting out. So it looks like it's ready to sort of fold over here by making a new low below these double bottoms here. So it'll pull down here further. So, if you've got stocks in this pattern, that will be the thing with them. So I'll probably come down and hit this trend line here, thereabouts. We'll have a look at 4650. 4650 would be group 2 in here. So between 40 and 50, we've got the Fibonacci sequences of price ratio 1, 2, and 3, and then 45 and 48. But at 8, we've got 4650, the lower end of group 2. Yeah, anyway, we'll get into all of that. But I think that this will be the, once this comes down, then we'll have this trade, long trade over here. I mean, the takeaway from all of this, by the by, is that all of these are corrective patterns. So all of this is a bullish correction, and we're nearly at the end of it, So that's pretty exciting in its own little way. So we come over to the energy sector, and with the energy sector, we were looking at a wave 5 and then down at this point here. So this is pretty much how we're sort of seeing crude as well. When we've been speaking over the last week or so, we were looking for this to be a wave 4 with an A and a B and a C. I think there could be one more little low in here for this. This will be the same as crude, and then we can have a look at this going up here. I'm not going to call any sort of trades into this unless we can see something in here. But yeah, look, as an A and a B and a C wave here. We could look at it as wave 1 here and wave 2 here. But the wave 2 is really humongous compared to wave 1 here. So it doesn't, it should be the other way around. So and it's not really, it's displaying more like a C wave here. See how wave A is sharper and wave C is lazy like me? So then it's kind of got all that sort of personality to it. So we'll see. It doesn't really matter because if we're going to be bullish in this, then this would be the arrival, the reaction, the first high above the level, and then there'll be an ABC pattern here, and then we'll go up again, you know. So we would see this at this point, we'll be all over it over here. So it's not that I'll stick my head in the sand and marry one particular count. You have to stay flexible and fluid, and the market's the boss, and we have to do what we're told, and that's it. It's not our opinions get us into more trouble than anything else, so we need to tread lightly on things. So so with the crude, the oil here, we've been looking for an ABC pattern here, and I could look at it as, I've got it here as an A and a B, and then 1, 2, 3, 4, 5 for the C wave. I could go wave 1 here, and 2 here, and 3 here, and 4 here, and then down for wave 5. You know, that could be doable, so I'm aware of that. But at the same time, it was a little bit high for a wave 4, but it's okay, you know. Anyway, so we're working both of these. We'll see, you know. If it was, yeah, anyway, this move here, it's a little bit tricky. I couldn't sort of figure it out a bit, is that I think this is the best fit anyway. I think this is the best fit. So this low here takes out this low, but we've only got 3 waves here. I could put wave 4 here and this wave 5 here. That's doable. That's possible. This going up here is a little bit sort of hard to read. That first little leg here is impulsive, so we may go up a little bit higher. We're on support at group 2 in here, so we're still, you know, the norm here, and we didn't get support on top of group 1. So we're still working with the number 8 here, you know, and this is group 1 above and group 2 below. If that becomes the support here, then we'll be going up and leaving this number. If this becomes the resistance here, we'll be leaving that number to the downside. So yeah, I'm not sure about this little guy in here. Not sure how this is going to play out. If for any reason that we get, the market does come up here and gives that first high above the level, that will be the first setup for the long side. So it'll be like this here, the first high above here, and then you can come to the second high, as I'm always harping on about, you know. Sometimes it's easy, sometimes you can see it, sometimes you don't, sometimes you can improve on it, all sorts of things. So yeah, but otherwise I think somewhere in here we're going to have one more leg to the downside, and then we'll move up there. So I don't really see a trade here. It's all just a bit messy around large numbers. And then we come over to natural gas. So the thing with the natural gas is that we've been counting down here for a while now, and we've had a 5-wave move down here, and that was it. So when we got down here, last time we were in here somewhere, but then we were looking for some type of ABC correction. So this will be the A, the B, and we can drag this over here. Get rid of this here. So I want to talk about if we're going to be right or wrong here for this, you know. So as far as the crow flies, this should be the A wave. We come back for a B wave. We could end up in some 3-wave move here. You know how it goes for that. And then we'll have the C wave up here. So once we go up here for the C wave, first of all, that B wave here will become the trigger for the short. And if we get 1 or 2 positions above here, then we could try to build some down below here. We have to be careful that we don't end up in a bigger ABC correction. So all of this for the A wave here, ABC for the B wave, and down for the C wave. Doesn't stop us trading it. It's just won't be. It's not going to be a fantastic trade because we've got some big numbers in front of us here. The other thing that if we were totally wrong here, then what would happen is that we would end up with 5 waves up here. And if that was going to be the case, don't worry about it, because we'll still get an ABC back at that point, and we can buy the ABC back, and then we can go up again at that point. So we're not going to miss anything. Being late to the party is okay in working patterns like this. But it's quite clear that we have a 5-wave structure up here, and it looks like we've got a little A wave here and a B and a C coming into play here. You can work out where the 50-60% retracement level is and all the rest of it. You're probably thinking, well, Pete, can we short it up here as an A and a B and a C wave up here? I think you can. You see how this is quite sharp here? So that's very typical of an A wave, and the B wave could be simple or it could be complex. So what you want to see with the C wave here is you want to see 5 waves, of course. This is what I would do. And I'd want to see it being a little bit lazier, you know. See how that's sharp? I want to see this one lazier. And then when you get to the top here, yes, you can short it at the top here. You can do those sorts of things. And it's not so silly, as long as you can count 5 waves in here. Once you have to be very clear where you are. If you're not clear and there's something, and you sense something is wrong somewhere, don't put the trade on. And I don't really recommend getting it on the turn. The money's on the turn and all the rest of it, but I'm a bit of a scaredy cat, so I just prefer to wait for this 5 waves down, because if I get 5 waves here, that's going to tell me I'm going to get 5 waves over here, and then I can manage my my stop will be here, that will be here. If I'm going to trigger it, as soon as that gets triggered, I can halve my risk, my 1% down to 0.5% if my account's under 50k, and then I can just sort of hang on for grim death at this point, you know, and see how it plays out. There's different ways a wave 5 can go down, but yeah. Anyway, it's shooting the breeze. Enjoy the weekend. Cheers.